Hi guys, welcome back to Finpact. Today I want to talk to you guys about the fact that I still think Bitcoin is a safe haven asset compared to fiat currencies. I'll explain why in this video. I also want to tell you guys that Vitalik Buterin has said that during crypto blues, it's important to focus on blockchain technology and not the prices and the volatility of different cryptocurrency prices. And that's pretty reassuring coming from Ethereum's co-founder. Sure, he may be a little bit biased to the crypto sector, but I also share the same belief system as I've reiterated many times on this channel. I also want to tell you guys that I truly think that this crypto crash is just like the 2008 financial housing crisis. And of course, I don't mean by the actual financial products are the same. They're totally different. I mean, back then there was a bubble with the house prices. They just kept going up, just like we saw in the crypto bubble. And then we saw lots of banks and financial institutions giving out loans during this period. And these loans were backed by collateral. And the collateral was in the form of the housing. But the issue is, everyone thought the housing sector was super robust, as they did with crypto in the bull run. They never anticipated crashes like the FTX scandal to take place. And the same happened in the 2008 financial crisis. So when the housing prices fell, all these loans basically turned into dog shit, if you know what I mean. And then these banks went bust because the loans they were giving out were worth jack shit. So then they ended up going bankrupt and the government had to bail them out. Now with the crypto markets, there's no government that can bail out these massive exchanges like FTX. And then the FTX scandal caused a domino effect, which affected loads of different crypto hedge funds and funds that had actually been over leveraged to the FTT token, which is the native token of the FTX, well, what existed FTX exchange. Now that's a quick summary. Now I want to talk to you guys about why I think fiat currency is actually the Ponzi scheme in this whole thing. Now the thing about fiat is that yes, a lot of us rely on it for our day-to-day expenses, a lot more than crypto, even though there are avenues. But with crypto's price volatility, to pay for daily expenses, it generally is easier to do it in fiat for most people. And hence why crypto mass adoption hasn't completely taken place. And people have also lost confidence in crypto after everything that's happened. But when we look at crypto, it's really important to just remind yourself that crypto and the blockchain industry is not yet fully developed. It's not a mature industry like perhaps the e-commerce market, which yes, is still continuing to evolve, but now they're looking at new ways to expand through AI and different Web3 technology, for example. So blockchain and cryptocurrencies tend to go hand in hand for many different use cases that the world does actually need, but that the world was not ready for just yet. And I also think the crypto industry hadn't developed enough to provide the consumers with safety and situations like the FTX scandal from not happening. So I just want to show you this graph. If you take a look at this graph, you can see that M2 is the money supply. And then we have the red line, which is the S&P 500 over the years. Now, if you take a look, as the S&P 500 has grown, apparently, well, during this point when we saw a crash, obviously post the pandemic, the government actually pumped money into the economy, as you can see here, this discrepancy here, to help revive the economy. Now, when you think about this, it's like the government are covering up the fundamental problems that are already taking place. Why should one try to just mask the issue when they can try to fix it using more stringent policies? Many people may disagree with me on this, but remember, this is just my opinion. But I think that quantitative easing and pumping money out into the economy is only temporarily masking the problem rather than the actual solution. I actually think that quantitative easing is exactly what's led, combined with all the different macroeconomic things with the geopolitical crises and the crypto market rallies and the stock market rallies and the over exuberance in the market. And I actually think all of this contributed to the inflation, and quantitative easing has definitely been one of them, and that is a negative side of QE. Now, in this article on Bitcoin Magazine, Mikey Koss has written, in what now feels like the blink of an eye, trillions of dollars were created, as you can see here, to prevent the system from imploding. Suddenly, the stock market was booming while it seemed like everything was crumbling. And that makes sense. Why was the stock market and the crypto markets booming when lots of people were losing their jobs. Companies were making budget cuts. How did this money come? And of course, it's through all the stimulus packages that the government put out to help everyone, which were actually a good thing, but definitely that's only in the short term. But in the long term, from an economic perspective, it's not ideal. And that's exactly what's happened now, because this fake money pump has caught up to us. Many people are realizing that this is not sustainable. And of course, this money pump has now caused inflation. So now the governments have also increased interest rates, which have been consistently happening over the last few months in loads of different countries to get a hold of the current inflation rates that have been the highest we've ever seen, especially in the US and the UK in around 40 years. Now, this is another example as to how I think this crypto crash is a bit like the financial market crisis. So if you take a look, that this is the home prices, the S&P Case-Shiller US national home prices, just between the year 2000 and where we're at now in 2022. So you can see the red line is the national home prices, and the M2 line, which is the blue line here, is the money supply. So you can see that, as Mikey Kossa said, you should buy a house, any house, it doesn't matter. Because if you don't already own a house, if you choose to save instead, you may never actually be able to afford one. It doesn't take a lot of empathy to understand the financial desperation many are feeling today. Yeah, so basically it's the inflation is so high, cost of living has gotten higher and higher, and incomes haven't risen the same amount inflation has risen. Yes, some companies have risen people's salaries, but not everywhere. And then on top of that, housing prices have just gone up. So does that mean to say that despite the crash, which you can see here in 2008, the housing market was sort of like a safe haven asset, and therefore it was better than saving? So that's exactly my point. Bitcoin is still that safe haven asset, but it is definitely a little bit less accepted than maybe buying a house. See, here's what he says, and I want to read you guys this paragraph because it makes complete sense to the points I've made. He says, Bitcoin is our savings in a world bereft of things worthy of investment. Even if it hits $1 million tomorrow, we're not selling. What would we even sell it for? To diversify? Into what? A stock market completely dependent upon money printing, hence that graph that I showed you guys earlier that he included in the article. An investment property where our tenants won't have to pay rent following the stroke of a politician's pen. Very true. It's sort of like a lot of people try to save money, invest in the stock market, make profits, and then put it in the real estate sector because they're like, okay, that's safe. That's a house. I have 2 or 3 houses now, or I have 10 houses, and they build their rental incomes and that sort of portfolio. Now, Bitcoin can be seen in a similar way. It's not as established, and with all the stuff that's been happening with the crypto infrastructure and regulations, we definitely need all that to get better and develop so that we can see Bitcoin as the safe haven asset it was before. Because the point that he says is that the technology is there. It's still decentralized. So if you take a look at this, he says, how could Bitcoin be a Ponzi when Bitcoiners don't even want your dollars? You see what I mean? It's like people who want to accumulate houses. Why would they want to sell that house for cash when that is depreciating with the inflation and government policies, yada, 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 when they could put it in a safe haven asset? So just like the housing market, people want to put into Bitcoin. And he says that what you don't understand is that we're trying to build something new, a better future for our children and grandchildren. So anyway, guys, that's my point I wanted to make in this video. I don't know if this video is going to be too long or too short, but I really wanted to explain the economic perspective I have on the crypto crash. I'm also going to be posting a video on what's been happening recently in the crypto market, so stay tuned for that video. It'll be coming up very shortly. And guys, remember, none of this is financial advice. If you're a Bitcoin advocate, then leave a comment down below. If you're not, also leave a comment down below. I'd like to hear what you guys think, and let's start a discussion. So anyway, if you guys enjoyed this video, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when I release a video, as a lot of the information is time sensitive. Thank you guys for watching. Bye.